Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 3rd of August 2011. And as we're in the height of the summer months, it seems that there's no stop to the selling. Markets are under severe pressure, and it's concerns over growth in the US that have really compounded the selling. Just when we thought that the main issues with Greece voting its austerity and now the US voting through the deal on its US debt ceiling, doesn't seem to have made any difference at all. The concern over cuts that they've announced will affect the US economy and really slow global growth. And of course, it's been a concern niggling at the back of the minds of investors throughout the year, but it seems that only now the reality is striking home. And so we're seeing continued weakness and continued volatility in the markets. The FTSE is down below 5,600 at 5580, the Dow around 11,800, and on the FX markets, the euro, considering the woes that are continuing there, not doing too badly. Euro dollar at 142.80, we've got cable at 163.75, and the beneficiary, really more than anything else, of course, has been gold. Gold is continuing to rise, new record highs, well over $1,600 an ounce now. It's at around 1670. Of course, a casualty of the worries about global growth has been oil. So Brent has dipped quite a bit, and it's at 114.25. So it's not just the concerns over the US economic outlook. It's a continuation of the Eurozone worries. We've got spiking bond yields for 10-year government bonds of both Spain and Italy, and those are two major European economies that investors are starting to get worried about. I mean, if Italy goes under, then there's no knowing just how far and widespread the ramifications that will have for financial markets, because they have issued so much debt across investors across the globe. So there is real concern, there's real worry, and the economic data at the moment really isn't doing anything to back things up. So how are clients playing things? Well, throughout yesterday, during the declines, clients were buying into the FTSE, but it didn't stop the markets from falling, and we saw a big drop in the Dow. So a lot of clients were stopped out, and it's been pretty tough trading for them. But they remain long the FTSE, hoping for a bounce, but nowhere near as long as they were yesterday. On the dollar, on the FX front, they are very much long the dollar, so that's long dollar yen, and short the euro, so opposing recent trends. Gold is interesting, actually. Clients picked the top and they sold a lot of their long positions. So for one of the first times in a very long time, we were actually short, clients were short gold, we were long gold, and it seems that they picked that top quite well. However, gold has actually continued to strengthen. They've been buyers of silver as well. So that's how clients are playing things. What does the rest of the week hold for us? Well, let's hope that there's some good news around the corner. We've got the Bank of England and European Central Bank interest rates tomorrow. The MPC really finding it difficult at the moment. They seem to feel that there's upside and downside risks to inflation, and it's very difficult to get a concise picture of how they see things panning out from them. But of course, interest rates will remain on hold, almost certain to remain on hold. For the ECB, again, they're probably unlikely to raise rates, even though they've taken a slightly more hawkish stance. And then, of course, the highlight of the week is non-farm payroll, and it would seem that in order to turn markets around now, we've really got to see a good number from the employment data from the US. We've had a decent number. The ADP private payrolls today were better than expected, and initial jobless claims in the US are trending downwards. So there's a degree of optimism about Friday's number. Expectations for around 90,000 to 100,000 new jobs. Of course, last month the figure was really dire. It came in at 18,000, so certainly it would be nice to see an improvement on that, and it would be nice to see three figures on that too. So what's the theme of this week? Well, the theme of this week is I've got a chart of the FTSE, and it would seem that the upward trend line that you can draw from the beginning of 2009, beginning of this bull market rally, it looks like the FTSE has broken below that. That's a critical technical signal that there may be further weakness to come. We'll have to wait and see, but it doesn't feel like one of those buying opportunities at the moment because sentiment is so downbeat. But we'll have to keep an eye on this chart to see whether there is further weakness for the FTSE to come. That's it for this week. As ever, do give us feedback. media@capitalspreads.com.